The jobs and housing market continue to remain red hot. It looks like Credit Suisse might be getting bailed out, and we're going to dive into the Asian markets today as well. Before we start it up, hit that like button, subscribe to our channel. Nothing we say is financial advice. We are a couple of guys who love the markets, love the strategy and the gameplay that goes into this, but we're not financial advisors. So please do all of your own research before any buying and selling. Kevin, we got some more data today. Every day we're getting data. We see that initial jobless claims came in under expectations. Expectation was 205K, came in at 192K. We see that housing starts, expectation 1.31 million, came in at 1.5. Building permits, expectation 1.34, came in at 1.52. So clearly these markets are still red hot right now. And, the expectation that the Fed is going to stop rate hikes may be a bit unfounded.
Yeah, 100%. I think that's been, that was a pipe dream, whether they're going to stop the rate hikes for a month or so. Like you were saying before the show, what was it? CME Group had like 90% chance of 25 basis points. So, I mean, that's a huge... It's been such a volatile, up and down. It went from 50 basis points to no basis points to now 25. It's been a wild month. We're just waiting until we get to Wednesday, but I completely agree. The initial jobless claims, that just tells me that, labor market, a lot of people probably don't want to be working right now. But at the same time, we're just seeing mixed signals all across markets and then the economy. Like I'm looking at, CNBC right now, and I can see that a lot of tech stocks are just ripping today. They're just doing extremely well. And I couldn't tell you why. I honestly, I don't know what's going on in the market sometimes. It just seems like there's a lot of confusion, a lot of fear, and then a lot of people that are just being super hopeful. So it seems like a very, very good time to be a little bit weary, not to be too overly optimistic, but I would definitely be cautious in these extremely turbulent and unsure markets that we're seeing right now.
Yeah, I'm a big NVIDIA bull. I've been holding NVIDIA since like 2009, and it's at like a almost 12-month high right now. And I know that earnings call was good. They're doing a lot with AI, but that's just such a buzzword. So a lot of these things, it's nice to see the numbers go up, but it doesn't feel right. We see Amazon up 4% on the day, Google up 4.5%. Tesla 2.25%. So many of these, tech stocks, Microsoft up 3.5%. Like there's a lot of big numbers today. And I think part of it is, now that Credit Suisse is getting bailed out, there's some optimism there that maybe the contagion is these governments are going to do what they need to do to slow the contagion. But I think we're going to see, we're in this phase, and we've seen it before, where it's just a roller coaster. Tuesday we had it was red on Monday, green on Tuesday, red on Wednesday, green today. And I think the euphoria is going to wear off, and tomorrow we're going to see more red. So it just feels like this is not it's a really weird market dynamic, and one that I'm just totally fine sitting on the sideline and watching it play out.
Yeah, I couldn't agree more. I think sometimes that's the hardest thing to do, just see people make money and then lose money. But at the same time, it's like, preserving wealth seems like the best play here. Not financial advice, but that's my play.
Yeah, you mentioned before we started recording that it's only been a year of rate hikes. And while we've seen inflation start to come down, it's going to take longer. And, if they don't raise this time, I would be surprised. But it's also going to be one of those things where it's going to have to be a while before they can actually pivot, because they need to start to see significant downward movement in these inflation numbers before they can think that they've increased the rates sufficiently. Because right now we haven't seen it. We saw decent numbers yesterday from the PPI, but it's still not good enough. And when you have all of these politicians, and we don't need to get too deep into the weeds there, but calling Powell an idiot, saying the Fed doesn't know what they're talking about, when they're on Twitter arguing with each other, I think that it's absolutely ridiculous, and they should all just shut the hell up.
Yeah, we're postponing the inevitable at that point if we're just not raising the rates this time around, and we're doing it because, we don't want the banks to collapse. Look, again, sometimes things like that need to happen. I think it's just completely irresponsible that some of these institutions could, act unfairly or in a way that hurts a lot of their, depositors, investors, but then at the end of the day, they get bailed out and they don't have to worry about any consequences. That's completely irresponsible. And if that's going to be the narrative moving forward, that, you know, these nations are just going to bail out all these banks, these institutions, uh, what does that end up? Where do we end up from there? Because at some point there needs to be some type of boiling point where there has to be some type of accountability. But if we're just, the nations are doing this, they're taking care of their own banks to make sure that, you know, markets don't crash or anything like that. I don't know where that puts us. That's just, it seems like new territory that we are entering. If that ends up being like, we're going to do this for every single failed institution.
Yeah, for sure. They're setting a very bad precedent has been set, and they eased up on requirements and regulations so much, and then jacked up rates, which had this, you know, this effect on bond yields and all that. Like, it's just a shit show. So it's going to take some time, but I think we can move past that. Like I said at the top, we'll talk a little bit more about some other markets. Kevin and I, you know, we use this show to educate ourselves and then try to inform as best as possible. And one thing I noticed is that a lot of the coverage of the Asian markets out there isn't very good. And this is even on like some of the big name sites. So like I had to like go into the weeds to try to get some information. But I think that there is, you know, still a good amount to talk about. We'll continue to go into it because, like I said at the end of yesterday's show, if you haven't watched it, you should go back and watch it. We're playing a game here, and we need to find the edges. And right now, the edges may not be in the U.S. markets. It may be elsewhere. It may be in places like China and Japan and South Korea and India and all of the other Asian countries. So I think we should get into that for a little bit. As is the norm, Kevin went and looked at the charts for some of these Asian holdings. I went and looked at the macro side of things. So a nice little synergy we got going on there. I'll toss out a fun buzzword. But let's start with China. And there's been a lot made about China's, you know, ending their zero tolerance policy when it comes to COVID. That happened back in December. And we're seeing, you know, China just had its lowest year of economic growth in over 5 decades. So it's been since, you know, the 70s, or like the early 70s over in China, that they saw a slower growth than last year. So they are making a concerted effort to try to bring outside investments into China. They've made it easier for people to get visas to come back into the country to start working and to attract businesses that way. And so I think that it's an interesting time to be looking at these markets. We said that, you know, down the road, 5 years from now, 10 years from now, we'll look back and see which of these countries' strategies worked out when it came to preserving their economies. And it may be one of those situations where China had the right approach, you know, taking last year as being, you know, they had that one, they sacrificed 2022 as a year of poor economic growth, but they're starting to open things back up. They're more stable, allegedly. I mean, the thing with China is you got to take everything they say with a grain of salt, obviously. Right. But there is definitely a possibility that we look back and their zero COVID approach, and I don't want to get into a goddamn political discussion about COVID, but let's just talk about it purely from the financial markets. Their approach to it may end up being the one that wins out.
For sure. Yeah. I couldn't find a lot of stuff when it comes to China, like the technical stuff for China. Again, I was looking at the Shanghai markets and obviously Hong Kong. But yeah, it seems like they took a slower approach when it came to COVID and everything like that. I don't think they turned on the money printer by any means. We did. And, you know, maybe they saw some pain in like the short term, but at the end of the day, if we look at the global, you know, the macroeconomic outlook, pretty much every nation is hurting right now. And it's widespread. Obviously, China reopening now, that might be bullish for them, but that might also inflate inflation, as we've seen. Like, a lot of people are expecting that China's reopening to cause inflation to spike. Will that happen? I have absolutely no idea. I think that it's, if anything, it's just going to help those markets because, again, people are working again. They're opening up trade. So it's going to be really interesting. But right now, there's a lot of stuff going on in the world, especially with China and Iran and Russia as well. So that'll be really interesting to see how the markets over in Asia shift, if anything like that develops as well.
Yeah, there's definitely, the trade war is going to continue. Biden has shown that he has no problem hurting the economy if it means having a trade war with China. We've also seen that there has been a lot of the factories in China coming back online, and they have seen very strong demand. So Chinese exports are going to pick back up. That means that the U.S. exports are going to probably decrease, moving, pushing the GDP back. Like, these are all things that are going to move us into that technical recession that people have been talking about for a long time. So, that is one area I was like, oh, GDP growth has been good. Yeah, well, the second biggest economy in the world hasn't really been doing a whole lot, and they're going back. They're kicking it back into gear now. We're seeing it with the with the different ports as well. They ship so much outside of their country, and everything's just coming back. So China, I think, is in a very good in good shape right now. Their banks are very strong, due to the whole like communism thing. So that's one area to look as well. And speaking of banking, we can kind of move it into India a little bit. That was one area when looking into what's going on over there. I think India is, everyone knows as a huge country with a huge population, but I still think a lot of people, at least in the United States, I can't speak for other countries, are still sleeping on it as the potential, especially in the tech sector, that India is putting out. You and I have worked pretty closely with a lot of incredibly sharp tech developers over in India. And I think that is one area that, as we continue to spend more time looking at these foreign markets, India stands out to me as having a ton of potential in the years ahead.
Oh, I couldn't agree more. Like we said, we have that good relationship with a lot of people who are in India working in the tech sector that are extremely smart. I know that's probably just one of many people out in India that are just building in tech. But I was also looking at the Sensex, which is like it's an index similar to like the Dow for India, and I'll pull it up right now. It is pretty impressive, actually. Let's see. Here we go. Sensex. There we go. Yeah, so it's pretty impressive. I'm looking at the weekly. It's pretty much been above this 50 moving average for a good amount of time. Like, this is extremely strong growth. Like, look at this. This is going back from, even in the world financial collapse, from 2008, 2009, all the way up to here. Let's see what the growth is on that with the ruler here. Well, it's more than 650%. Let's put it that way. Which is pretty damn good, especially if we're looking at an indice that's or one of the indices that is for an entire nation. So really impressive. What the hell's going on here? There we go. Really impressive. We did see some spikes below 200 EMA, like this is obviously the COVID collapse, but look at that strong recovery. To what extent is that all India? I have no idea. Potentially that could be American investors who got some money from their governments and started pumping it into foreign markets because they thought maybe that's a smart thing to do. I don't know. We'll see if that plays out. But for right now, I'm looking at this market. I mean, it's hard for me not to say this is a bull market for India right now. You know what I mean?
Yeah.
Like, this is really impressive. Seeing a little bit of retracement here. Obviously, this has to come down at some point. There's probably some gaps that need to be filled. But it's been pretty nice, especially in the past. Let's see, I guess from June when Three Arrows Capital collapsed all the way to, the beginning of this year where we started our run. It looks like it did the opposite of what the United States did in terms of the market. So as a lot of things were dropping from June to December, we see a huge pump in the Sensex from June to December of 2022. And then as things are pumping in the U.S., we're seeing a little bit of a retracement. If this ends up being any indicator of what's to come, I anticipate India to see some further bullish price action. But again, I'm only looking at the weekly stochastic RSI, which is pretty oversold at the moment. And if we look at the monthly, yeah, it's pretty undervalued. Again, things can change 100% when we get another COVID, we can get a war, anything can happen that just absolutely tanks these global economies. I mean, even consumer credit. The U.S. could default. Tons of stuff could happen. It just depends on exposure from one nation to another, institutions. But for the most part, this is looking pretty damn strong. And I couldn't agree with you more on people sleeping on India.
Yeah, I was also, just for fun, looking at some of the different banks in India that I was reading up on. And the market cap of some of these banks is gigantic. I don't know how to pronounce it. I'm not going to butcher it. ICICI Bank has a market cap of 5.761 trillion. That is a gigantic bank. We look at some of the other ones as well. Axis Bank, another big one over in India. They are down from their all-time highs. When they were trading at 960, they're about 830 right now. Another huge market cap. I mean, there's so much wealth being created over there, and just the opportunities are crazy. I know, like looking at that chart, I'm just like, man, they've gone up so much, but at the same time, it still feels like there's a ton of opportunity there.
Oh yeah.
And I'm wondering if like maybe we need to take a little trip over to India, kind of, get boots on the ground, see firsthand what's going on, and then we can, start dabbling in the Indian markets.
Yeah, I mean, again, I'm all game for opportunity, always, and especially that bank that you actually mentioned. That I know that 100% is a lot of a lot of tech companies use that bank. If I've definitely made payments to that bank before in U.S. wires, so seeing that, it's pretty impressive. I didn't know the market cap was that big, but that's pretty. It's
Yeah,
I mean, it just goes to show you how much growth there is and probably how much international leverage people are using India for. Like, obviously, a lot of people talk about, they outsource to India. Uh, Maybe that's why they're doing so damn well in terms of maybe some of their banks. Again, it could be one of those things where it's like the two extremes. Like, you're either doing extremely well or you're doing extremely poor. Like, you're not doing extremely well. But yeah, it's really impressive. And then again, maybe we just need to swap some USD for some rupees and just like start dropping it in the markets. I'm game for that. Anywhere where they're not
yeah.
going to tax me as much and we're going to make some money. I'm all in.
This is where the psychological side of the markets really fascinates me too, because I do think that there are a lot of people. The term "ugly Americans" exists for a reason, and I think there's a lot of people who have these preconceived notions about India in their heads, and maybe they viewed the work in India as like more on the production side and factories and stuff, but that is not the case. Like they
No.
are a giant in the tech sector, like a giant. And I think that the fact that people haven't realized that yet, that there's still so much ignorance to how powerful their economy is, at least over on this side of the world, could provide an opportunity. So just something to keep in mind. The last thing I wanted to touch on from a macro standpoint in the Asian markets that we saw happen just the other day, a deal was reached between Japan and South Korea. They've had export controls from Japan into South Korea since 2019. Those have been lifted. That's going to be really beneficial for the chip industry over in South Korea. And I'm not talking about potato chips. I'm talking about processing chips. So, that's going to be good for Apple. That is going to be good for Samsung, who have pretty big facilities over in that part of the world as well. So just something to keep in mind. There are these news stories coming out that can definitely play into your decision making. And I don't know if that's impacting the price of Apple today or not, but just something to keep in mind. We're gonna keep looking at these international markets, whether it's in Asia, Europe, South, Africa, South America. Like we got to keep a better eye on what is happening globally. I hope at some point we can bring someone else on the team here so they can assist us with that. So it's not just you and me trying to figure out all of it, but we're gonna do the best we can right now with just the two of us. Damn it.
Yeah, I couldn't agree more. And obviously Japan's one of the largest economies too. Like, people quietly don't know that it's like probably around number 3 or 4 in terms of how big they are as a world power. A lot of tech stuff, and that's pretty huge that they opened up that up with Korea, with South Korea.
Mhm.
So it's really interesting. I looked at the Nikkei, which is their indice for Japan. Nothing too notable. It's kind of trading in like what I would say a bull flag. I'll just show it real quick. Uh, yeah, we can see that. I mean, it shot up a ton. We're still above the sun the daily, but if we go to the weekly, we can see that we're just kind of like downtrending. I think we're going to probably retest this 200 EMA. Will we bounce off of it? I have no idea. I think that we are seeing the stochastic RSI is pretty overbought. We tested the top level of this trend line. We're going to have to come down. Ironically, with TA, this always lines up where it's trading in a pattern, and then here comes the 200 EMA, which always serves as pretty good support. I think that there is a good chance that we could potentially see some type of drop here. Again, this is a huge gap in my opinion from here to here. Let's see, from there to there. That was a huge drop. That's or 16%. No, it's not 16%. There to there, 16% pump or so that we made from April 2020 to, let's say, what is that? January 2021. So I do expect all gaps to be filled. They're probably gonna have to find some support here. I would anticipate that being on the news of something extremely catastrophic, though. Like, I think that this is a pretty good setup for macro. If I pull up the monthly, for the Nikkei. It looks like we're pretty oversold, and it looks like it's making some good momentum to the upside. So I think that this thing could be poised for a good pump in the long term. I don't think it's going to be immediate. I think that, again, the world's economies are going to have to see some type of retracement at some point. I don't know about India. They're doing pretty good right now. But point is, when I look at this, it's just telling me that we're probably going to have to go back, retest some of those gaps that were pushed up extremely exponentially from, COVID right after the collapse. And we're going to see hopefully some bullish continuation. Again, the macro itself, if we're looking out a few years, maybe 2 years from now, looks pretty good. Like, I'm actually really excited. But the problem is, the longer that we postpone, getting through this rough period where we need the market to correct for it to be healthy again, for people to actually be able to make money, being bullish instead of just swing trading and liquidating people, it needs to happen. But long term, I think a lot of the world economies will bounce. I think the US will do pretty well once we find a bottom. I don't think we're anywhere near it, but it is really interesting to see how some nations, there are bull markets going on opposite of what's going on in the US. And it's like you said, it's just take advantage of some of this stuff. It's a great opportunity. I know it is hard to enter some of these markets 100%, but there are ways you could definitely have exposure to them, whether that's through ETFs or, just currency Forex. There's definitely ways where you can have exposure to these nations. It's just, I don't think you can actually trade on some of these foreign stock markets unless you're a citizen. I definitely know that's the case for a couple of Asian countries like Malaysia or Singapore, but for others, there's definitely ways you can have exposure to some of their bullish price action.
Yep. I think you can look at mutual funds, stuff like that. So keep an eye out for those. There are opportunities out there. I think that over the next, 5 years, we're going to see those countries probably recover from the COVID financial crisis better than the United States. So something to keep in mind. That's going to wrap it up for today's show. We'll be back tomorrow to close out the week. Not a ton of data coming out tomorrow. I think we're mainly going to look at price action and discuss, what our expectations are heading into next week's Fed meeting. It is going to be a very important one. Excited to see how it all plays out. Once again, if you're still here, appreciate you watching today. Hit that like button, subscribe to our channel, drop a comment, share what we're doing. We really appreciate it. Every single supporter means a lot to Kevin and I. So thank you for being here, everybody. Have a great rest of your day, and we'll see you tomorrow.
Keep an eye on Bitcoin dominance.